Hey, welcome to Crypto Corner. This is Andy and Nicole, and today we're going to talk about really what the hell happened on Bloody Wednesday, from last Wednesday to Wednesday. Bitcoin just experienced the largest weekly drop in Bitcoin history, and this is quite common. It's very needed. It's a necessity. It keeps the ecosystem deleveraged, and we'll see why that's important here in a minute. And first of all, I wanted to tell you what was going on. There's a lot of misinformation being put out there. Some of it was people describing what happened in the crash, and the common denominator seemed to be China and their miners, because China came out with regulation, which they've done umpteen times in the past 5 or 6 years. They seem to always talk about no Bitcoin, and now they're saying miners because of CO2 and pollution and all that kind of stuff, which is not really true. Now, they have had some concerns in their mining operations up in northern China, Mongolia, but the ones down in Shenzhen and those types of places that make up 25% of the hashing rate, they're still mining. So the concept sounded good that the miners, due to regulation of the Chinese government, took their rewards and cashed out, and that's just not the case. You can go look at Glassnode, and you can see the BTC outflows, and it wasn't the miners. So the miners are not at fault. So when you hear that, oh, it was the Chinese miners and blah blah blah, it wasn't. I mean, we can quantify it. We can look at it. We can look at the data, and it just didn't happen. So the other stories that I hear, oh, it was the whales, or China doesn't want Bitcoin in there because it's competition against the digital yuan. And it all makes sense, don't get me wrong, but it just isn't the case. It didn't happen. So, and Glassnode confirms that it didn't happen. So what I see happening from this crash is more regulation. I think it might hold up some of the Wall Street entities or ETFs or what have you from getting approved this year, because they're going to go back to this point and say it's too volatile. I mean, it dropped 80%, 60%, or 40%, and they're going to use that as reasons to really encumber the ability for some of these Wall Street firms and ETFs to gain traction and get approved to be able to offer these type services. So we'll see, because governments don't like Bitcoin, and we all know that. But Bitcoin really assures me that it's a money for we the people, and that it can operate autonomously without central authority, without regulatory authority. There's no tether to Bitcoin, but to me, that's what gives it value. So when I look at these crashes and I look at all the nonsense of what people are saying and why it happened, and oh, it was a bunch of whales and that cashed out, oh, it was Elon Musk and he tweeted this or that, that's all nonsense. We can tell exactly what happened. We can follow the money, if you will, and it came from leverage. It came from institutional or professional traders. We can track now that $12 to $14 billion was lost on 800,000 leveraged accounts. That started the snowball effect. It started back, May 18th or thereabouts. And over the last week or so, there's been 100,000 margin calls a day. So a total of $14 billion, 800,000 leveraged account. This is good. Deleveraging of this ecosystem is a good thing, and it's needed. It's a necessity. You cannot, to reach higher highs, you need to consolidate, because we're still in a bull run. We're still up a couple of 100% this year. Now, what we need to figure out, and we'll be watching closely, did we just hit the low? And if we just hit the low, that'll signify that within the next 40 days or so, we're going to see a parabolic growth, just like we did the all-time high of 2013, 17, and current real time right now. So that was where most of the money. Now, we can also track that the other sellers that got fearful, that, everybody calls it, I hate the term, weak hands. It's people that were probably new, got scared, because we can track and we can look at the weekends, they only had ownership of said asset from 1 to 3 months. So that's not very long at all. So really you got three or four choices, really. I mean, if you're new to cryptocurrency, you're a strict buy and hold, or you should be, because you don't invest in things you don't understand. So that's one option. You can buy and hold. Secondly, you can listen to guys like me on, YouTube, and be careful who you choose, because you don't know if they've got an underlying interest, whether they're being compensated by developers or exchanges or whatever it is. I am not taking a dime from anybody. I don't charge anybody anything, and I'm not going to. That's not what I'm about. I've already made more money than I can spend. Now it comes down to, can we build this ecosystem, and we, the people, own, maintain, and control our money, and pass that down generationally, so our kids have a better chance of being successful without the manipulation of money. That's what drives me. This is life-changing, in my opinion. I'm in for the right reasons. I'm in for the long haul. I'm not a day trader. So getting back to the options, if you're new, you're buy and hold, or you should be. You shouldn't be even thinking about anything else. Stay in the top 10, or buy one of the top, there are 8 coins make up about 85% of the entire market cap. And they're very easy to find. Go to an exchange, look at the top 10, throw out XRP and probably a Tether or USDT coin in there, because in my opinion, those don't count. So you got really 4 things that you can do. What we call HODL, hold on for dear life. You buy and you hold. That's the end of it. You can learn to trade, and learning to trade can be expensive if you don't know the right person. It can be difficult conceptually for a lot of people, because a lot of people are in cryptocurrency and they don't understand a damn thing about it. They just don't. They're like people that go to Vegas to gamble. They're gambling all this money. They don't know the rules. They don't know how to bet. They don't know what money management is. They don't know the odds, but yet they'll throw the money in. So, okay. And then like the third way, you could give your money to professional traders that you could put your money in that institution. Some of them are banks, some of them are exchanges. But then again, the risk there is you don't own your private keys. You're not the custodian of your coins, and there's some risk there. So really, those are your 3 or 4 options of what you'd like to do. So hopefully that helps you in, what the heck happened, and all those different types of things. But corrections are normal. They're necessary. All of these crashes that you see here on the screen had calculations and different consolidation periods. Single one of these very shortly after the blow, and we can document this. We can remember everything's cyclical, especially after halving. We've seen it now 3 times, or 2. This will be the 3rd time, what we're experiencing right now. So nothing to be crazily concerned about. This happens. This is healthy. If you're at that point right now and you're thinking about selling, all that you're going to do at this point, I mean, the damage has been done. All you're going to do is lock in a loss. Don't do it. You might as well ride out the storm, because here's what I can tell you. The next phase, if we can identify this bottom, we're going to go parabolic. So I hope that helps you understand what happened with the crash. Not to be alarmed. These things happen. They're healthy. And we'll head on down the road from there. This will be part 1 of 2 that I'm going to do. I'm going to do another one that I'm going to show some charts here and show you the cyclical events. Everything's cyclical. I don't care if it's monetary velocity, interest rates, inflation, deflation, the stock market, interest rates, Bitcoin, everything. Once you understand these cycles and how they work, and you can understand just the basics, you can put yourself in a very, very profitable position. So hopefully that helped you guys here today. We'll talk some more. Well, I'm on another video right now. So